I'm Sandy Franks, and you're watching Smart Investing Stock Breakthroughs right here at TaipanFinancialNews.com. Today we're going to highlight not one stock, but two. As you'll soon learn, one has already gained 106% and the other is trading at just around $11 a share. A great value for a company that has two drugs already in phase 2 FDA trials. To tell you more about these stocks and why they're recommended buys is Aaron Beal, Group Publisher for Taipan Group. Aaron leads a team of 5 analysts on a monthly quest for stocks that offer tremendous returns for readers. Aaron, thanks for taking the time to be here with us. I'm sure viewers are anxious to find out about these companies. Let's start with a company that is already up 106%. Can you tell us about that one?
Sure. Well, thanks for having me, Sandy. The first company is a recommendation that I originally made in Taipan in February of 2005. The company then was trading at $35, and it's now trading at $72, so that's a 106% gain in 2 years. And my price target by the end of the year is $90, so that's a substantial gain still to come. The stock is LAN Airlines, ticker LFL on the New York Stock Exchange. It was formerly known as LAN Chile. And the company provides both domestic and international passenger and cargo air services to more than 50 destinations in Latin America, and also the Caribbean, Europe, and even the United States now. In fact, LAN Airlines is the main provider of air services in Chile. And it's also one of the largest and leading airlines in all of Latin America, which is a really big market for them.
It certainly sounds that way. So why recommend an airline company? Aren't most struggling, particularly with oil being such volatile and the prices going up and down?
You know, they are, and that's a valid question. But despite the rough patch that the airline industry as a whole has been skidding on, somehow LAN has managed to post solid results. And that's really something that can't be said for many of these other airlines and couriers. LAN's most recent Q4 2006 earnings show net sales of $93.6 million. For an airline, as we know, that's a very good profits. Passenger revenue and cargo revenue are both up nicely, and operating margins are also up. So that's a big plus for this company.
You're right. The numbers sound good so far. Let's talk about sales. How do they look there?
Well, again, sales look great. Just last week, the company announced that sales are set to top $3.6 billion in 2007. And additionally, they plan to invest $2.6 billion between now and 2011.
What kind of cash are they sitting on, Aaron, if any at all?
And this is amazing for an airline. LAN has actually managed to sock away more than $280 million in cash, and its only long-term debt is from aircraft financing. And that's something none of our other domestic airlines can say.
Okay, let's talk about the customer base. How is LAN increasingly growing its number of passengers?
Well, it's simple. They're expanding their services across the board. This started as a small airline. They started in Chile. They've gradually expanded into the neighboring Latin countries. But now they've broken through the U.S. market and have conquered several U.S. destinations. They also just branched into Argentina. But the big kicker for this company is that they're going to launch into Brazil this year, and that is the largest Latin American market. And so that's very exciting for this company.
Aaron, is there any other airline that can boast this kind of growth?
You know, there's really not. Some of our domestic airlines have been starting to turn around a little bit, but as you know, JetBlue is one of the ones who's been in the news lately with lots of problems, and this really is a unique airline.
Well, going back to the numbers, what's its PE?
The PE is low. Fundamentally, LAN Airlines is very attractive. The PE is just under 13, which is very reasonable, and has a PEG ratio of 0.9, which we know that anything under 1 is considered undervalue. If you look at a chart, again, the ticker is LFL if you want to pull up a chart. This uptrend is just beautiful, and all factors considered with sales and fundamentals, I'd place a $90 price term target.
So you're suggesting we could see another 25% gain from LAN Airlines?
Absolutely. And you know the best thing, Sandy, is that this company pays a 3.8% dividend. I mean, it's just a great deal all around. And though we're not getting in at the beginning of this, I think that there definitely is a lot more potential upside coming over the next quarters.
Okay, let's move on to the other stock that you're suggesting is a good buy. It's a medical company, correct?
That's right. The stock is Human Genome Sciences. That's ticker HGSI on the NASDAQ. And this is a recommendation from Ann Sosnowski's Diligent Investor newsletter.
So what do they specialize in?
Well, they are a biopharmaceutical company. They research and develop protein and antibody drugs. The exciting thing about this company is that their current pipeline includes drugs across the gamut. They're looking at drugs for hepatitis C, which is a big one, lupus, anthrax, cancer, rheumatoid arthritis, and even AIDS. This company was founded in 1992, so it's not a brand new startup. It's headquartered outside of Washington, D.C. And the best thing is that it currently holds more than 530 U.S. issued patents.
See, that's a high number of patents to hold in what, only 15 years of existence? How big of a company are we talking here?
Well, you know, it's not a small cap company. We're talking about a market cap of $1.56 billion. They operate in the Diagnostic Substance Center in the healthcare industry.
Now, Erin, I'm sure our viewers have heard of Human Genome Sciences before. Weren't they around during the tech bubble?
They were, and I'm sure that, you know, a lot of people have heard the name. During the heyday of the tech bubble, the company's stock traded for $116 a share back in 2000 before the bubble burst. Today, it's trading for less than $12 a share, but I really think this is an extreme value for this company, especially considering that they have 2 drugs in phase 3 drug trials right now.
Okay, well, let's talk about those trials. What treatments have they developed? What is in the trials?
Well, the trials are really a big reason that I like HGSI right now. The company is extremely low priced while maintaining optimism about their new drugs and their place in the market. So let's talk about the first drug. The first drug is moving through the pipeline is hepatitis C drug, and it's really expected to be a blockbuster biotech globally. I don't know if you know, Sandy, but hepatitis C affects 170 million people worldwide. And what the disease does is it causes an inflammation of the liver that can lead to cirrhosis, liver cancer, and, you know, can be fatal.
Well, but Erin, how is their treatment any better than what's currently on the market for hepatitis C?
Well, there's not a lot of options on the market right now for hepatitis C. According to Forbes, drugs companies have been racing for better drugs because what's on the market right now have really terrible side effects. And, you know, on top of the side effects, the cure rates aren't there. Chris H. Jenner, who runs the T. Rowe Price Health Services Fund, was recently quoted as saying that the hottest area in drug development right now is for hepatitis C. And the winner of this industry is going to have an extraordinary increase of value because the market really is so significant.
So I assume the market is wide open for hepatitis C cures then, right?
Absolutely. Global spending on hepatitis C drugs could grow 300%. From $2.5 billion currently to more than $10 billion by 2012, and that's right around the corner.
Now, you mentioned they have 2 drugs in the FDA pipeline. What's the other one?
Well, the other one is dealing with homeland security, and, you know, we know that there's a lot of dollars to be had in that market. The company just secured a $165 million order from the U.S. government to supply 20,000 doses of its AB-thrax drug to the national stockpile for anthrax disease.
This treatment relates to anthrax, right?
That's right. AB-thrax is a human monoclonal antibody, which is a specific kind of cell line that prevents anthrax toxins from entering and killing the cells.
Well, what does Human Genome Sciences expect to receive the $165 million cash from the government? When do they think they're going to get that money?
That cash is coming to them right around the corner. It's set to deliver these doses of AB-thrax to the stockpile in 2008, and so 90% of these revenues will come next year when the company meets with the government on the terms of the delivery, and when the rest of the drug is licensed. For 2007, HGS expects to complete enrollment of AB-thrax and all the clinical and other studies necessary for the use of the drug.
So how does that cash injection affect the revenues for the company?
Well, you know, some of the news is already priced in, but the company still expects to receive a 50% rise in revenue this year, which is fantastic.
And it's a buy for your group as well, right? This is what you're currently recommending.
That's right. It's, as I said, it's currently trading at less than $12 a share. I have a $20 price target by the end of this year, and that's just because of the preliminary data from the phase 3 trials.
So to wrap it up, one company is already up 106% but has room for more growth, and this one is a buy at under $12 with room for growth as well.
That's right. As I said, I would buy LAN Airlines here with a price target of $90, and I would also buy Human Genome Sciences with a price target of $20.
Okay, good information. Thanks, Erin.
Thanks, Sandy.
You can find out more about these stocks in Taipan, the group's flagship publication, in Diligent Investor, one of the newest in the group, but already posting strong numbers. Sign-up information is available right here at TaipanFinancialNews.com. That's it for now. I'm Sanya Franks, and I'll see you again next week. Until then, here's to great profits from smart investing.